All right. Go back to this one. Hello, hello. Good morning, team. Good morning, good morning. Hey, out and about today. So, trying to get my mojo on with the moving around and doing a bit of a live stream coming to you guys on the streets. Well, not necessarily on the streets. I'm inside, but doing a bit of travel, catching up with team and folks as the newfound um, getting back to normal is occurring. So hopefully you're all awesome and well wherever you are. Um, Bit of a shout out there to Alison and Heath. Good morning to you guys. A few people jumping on now. Hopefully, let me know just quickly in the chat. Give us a bit of a thumbs up or a yes or whatever it is. See, am I coming through nice and live and clear? Just to make sure that all the audio and stuff is working. But whoever you are, wherever you are, good morning to you. Hey, good morning, Rose. Good to see you. I don't have a coffee with me right now. What is going on? Wealth Coffee Chats without a coffee. I was running a smidgen late. Thanks, Alison. Running a smidgen late. Didn't get myself a coffee, but I'll grab one straight after this. So, welcome to a Wealth Coffee Chat without a coffee to chat over. But in reality, I've had a couple of coffees already, folks. So I've got plenty of caffeine on board. Morning, Chris. Hey, Chris, how good's that new Mac, huh? The Mac Studio. I reckon I'll be getting one of those. Anyway, Chris, hopefully you're well, mate. Anyway, folks, good to see all of you guys. Just warming up there, getting the intros done. If anyone is stumbling by, anyone new to the channel or the show, welcome. Jason Witten's my name. Been property investing over 20 years and helping property investors over 18. And across Australia and New Zealand, we've helped over 6,000. I think it's over 7,000 people now. 6,000 like a number from a long time ago. But over 7,000 people buy and own real estate across Australia and New Zealand. And along the way, we've learnt one or two things. And each morning, if I can coordinate it well enough, I jump online in the mornings, hang out with you guys for about 15 to 20 minutes and have a quick wealth coffee chat about what's going on in the world of property investing, the wealth creation when it comes to the real estate market, the real estate game, and what we might need to do and understand and appreciate and think about as property investors. So welcome to Wealth Coffee Chat. Give us a shout out in the chat if you're new. Let us know where you're dialing in from, where you're coming in from as we roll along. I might need to use my glasses a bit this morning because I've got a smaller screen. It's a bit more difficult to see it. But there you go. Anyway, so great to see all of you guys on, and a bit of a shout out there to Rodney. Good morning, Rodney. How are you, mate? Good to see you. All right, team. Well, hey, today I thought we'd talk about, some of these things that I've been seeing around the traps of late. When there's a little bit of rhetoric about, hey, how are we going to get back all of this money that the government has borrowed or printed or whatever, trillions and trillions of dollars. And you guys know my opinion on the number one risk to property investors, probably anywhere in the world, but in Australia. What's our number one risk, folks? Put it in the chat for me. So I know you guys have been listening. What is the number one risk that we need to keep an eye on over and above? Not interest rates, not marketplaces, not natural disasters or wars or anything. What's our number one risk that comes to us that we need to be able to manage and navigate? And Chris is on it right there. It's politics, folks. It's politics and politicians. They're all maniacs. That's it, Leonie. And as property investors, we can do all the things that we need to do. We can do all the right things. And at the moment, there's a little bit of noise about getting access to our Superfund dollars and cents. Okay, and you'll start to see this ramp up a little bit in the background. Andy Fenton and I. Andy Fenton is a long time um, co-host with me on our Wealth, Wine and Wisdoms on Friday afternoons. And we talk about the idea that, building wealth in different places, building wealth in your personal names, building wealth in company and trust structures if you are a business owner, and building wealth in a super fund is pretty important, okay? And let me sort of jump in here, and I'll see if I can do this. So, um, you guys have heard me talk about this before, where there's, three lanes. Lane, there's an E in there, isn't there? Three lanes of wealth that we build upon, or places we can own assets, folks. Okay, the first one, the first lane of wealth is you as an individual, couple, team, individual, whatever it might be, in your personal world. And why do we separate these? We'll talk about this in a minute. Maybe you guys can tell me in the chat, why do we talk about building wealth in three different lanes, in three different ownership structures? Why is that even on our radar as investors? Why does it matter, folks? So tell me that while I'm explaining the other three. Give me a few things that is important for us to understand. Why would we buy it across three different ownership structures? Why not just buy it all in our own name, or buy it all in a super, or buy it all in a company and trust? Okay, diversification, Chris. That's a good one. Chuck a few more in there for me, folks. What's a few other things? Why do we do this? The second lane, depending on where you are, okay, and I'm going to put it for most folks probably listening in, is your super lane. Okay, super, that's the second lane, and the third lane is company and trust structures. Mostly for business purposes, but yeah, and business can be, a property business can be for business purposes. So we've got these three lanes of wealth, team, three lanes of wealth. Your personal wealth, for sure, great, okay, diversification, tax minimization, risk reduction, absolutely. Markets move at different paces. Beautiful. Chris O, Ingrid, Ian, Allison, perfect. All right. Mitchell, Leonie, absolutely. All of those things, right? So let's just quickly do a quick overview on your personal situation, right? Over here, we get our PPR, capital gains, tax-free. So we don't pay any tax on that asset. Hey, that's kind of nice, right? So having an asset that we don't pay any tax on, folks, is pretty important. So a big tick in the box. Now, do you get a capital gains tax-free asset in a business? Well, you do, but by and large, there's a little trick to that one. And do you get a capital gains tax-free asset in super? How many of these PPR assets do you get capital gains tax-free? Yes, Claire, absolutely. You want to minimize the risk for sure. All right. You put each one of these lanes are sort of like, if you do it properly, they protect themselves if you do it well. So you only get one capital gains tax-free asset in your own name, but did you know you can own up to 1.7 mil of capital gains tax-free assets in your super? Over here, as a business owner, right, and business, you can have up to $2 million worth of capital CGT, capital gains tax-free. All right. So tell me, folks, what is the limit in your personal name? For, I'm just going to move this over just in case that is you're not being able to see. Tell me, what's the limit, folks? Is there a limit on what the on your PPR when it comes to your? Let me see here. There we go. Hopefully you can see that now. Is there a limit on your value of your principal place of residence that you can have capital gains tax free? Is there a limit? Is there there might be a limit because of your ability to borrow, but is there a limit? Is there a cap on that, folks? Chuck it in the chat for me. The answer's no, right? The answer's no. So there's no limit. So you could have $100 million home capital gains tax free. You guys, do you understand that, right? So, like, and you know, people go, oh, why does a rich person need a $100 million house? Well, do you know why? Because they're smart, and they know if they buy a $100 million house and they live in it, and it's treated as their principal place of residence, and they sell it for $200 million, they just made $100 million capital gains tax free. Team, that's pretty good, right? Right. This is the smart stuff that all of us as investors need to appreciate and understand. Bit of beeping going on in the background there. Hey, just let me know if you can still hear me. One of my earphones, I think, just dropped out, but hopefully it's still there. So, if you think about this, right? You think about, for us as investors, what's going on when we run these three lanes, okay? And I'm kind of going a bit of a long way around to making my point here with what I want to talk about today, is that, you know, we need to manage this very effectively for risk, tax minimization, different volatility, but, you know, take advantage of the amount of tax effective ownership as an investor in the future. Because, good question, Mitchell. I'll get onto that one in a minute, mate. So hopefully, you know, that's just a quick overview, folks, these three lanes of wealth that we can own real estate or own any wealth. Like what Mitchell was asking, you know, what sort of assets can you own? We'll talk about that in a sec. Now, obviously, team, I'm not a financial planner. This is not financial planning advice. And if you want some, you should get someone with a financial planning license. But what I do is I teach people about real estate investing, and ownership of real estate investing is pretty important to understand the structuring, right? So that's my little disclaimer there, folks, if anyone's listening in. But listen, you know, here's something that's going on right now. I'm going to sort of focus in on and have a little look at. There's been some calls because in Australia, our Superfund industry is just full of cash. It's one of the wealthiest per capita Superfund industries in the world, or retirement funds in the world. We have trillions and trillions of dollars in our super system. Australia's got quite advanced contributions, and it's going up. It's going from 9.5% to 10% and beyond, and there's an aim to get it to 12.5% for Australians. So, you know, there's a little bit of talk about, hey, listen, we've already given people a $1.7 million capital gains tax-free cap on and an income tax-free number as well when it comes to your super. Why do we need to give anyone any more? Now, if you combine a couple, 1.7 together, 3.4 million, you get some maybe 15 or 20 years compounding that goes up. You know, that could easily reach, you know, $4 or $5 million into the future if you can get the amount of assets into your super in the right time. So that's where this sort of, hey, no one needs more than $5 million worth of assets in their super. The vast majority of Australians, you know, don't require any maintain their standard of living. And, you know, that's an interesting conversation to put out there. All right. So Mitchell sort of said, hey, what's going on? What can I, you know, buy in my super? Mitchell, there's lots of stuff you can purchase in your super, properties, shares, etc., etc. Mate, reach out to your financial planner if you want to ask about, you know, anything strange or weird, you know. But mate, there's a vast majority of things that you can own in there, and a vast majority of different ways of doing it. Real estate, you can absolutely 100% own in super. There's a number of different ways to do that. But yeah, I'm a big fan of owning real estate in super. So think about this, folks. All right. the powers that be, the crazy pollies, they're saying, hey, listen, we don't think you should have more money um, than 5 mil. All right. Um, and for me, tell me what you guys think about that right now. I mean, at the end of the day, there is like a bit of an underlying tall poppy syndrome in Australia where it's like, yeah, no, if you got that much money, you can get stuffed. You're a rich bastard, you're ripping someone off. Which I in my world, I don't agree with that type of attitude. Listen, I think there's some smarter ways to manage our financial well-being in this country, but at the end of the day, one of them is not um, disadvantaging or disincentivizing the every person in the Australian system to get to self-fund themselves, to fund their own retirement in the future. And at the end of the day, for me, for you, that ability is there no matter who you are, whether you're a billionaire or whether you're just starting out with your first job in Australia, which is awesome, where you've got the ability to do a few things and take care of ourselves in the future, unlike in many other countries, folks. So, I'm always against any of that rhetoric and conversation when, you know, um, if someone works hard, takes more risk, you're taking more risk in your life to borrow money and buy some real estate to make sure you can look after yourself and your family and maybe some others. And then, for me, I see that as an add value to our society because you're not going to be a financial burden on the taxpayers of this country in retirement. And so you can self-fund and you add up to the day you die, you're adding value, you're adding economic value to the country. I think that's part of being a good citizen. But we're not going to talk about that today. We're talking about, hey, what do we think about this? And the self-managed super funds. Here's a few things that might answer your question, Mitchell. Just quickly. Hey, good morning, Hardik. Good to see you, mate. Right now the self-managed super funds, have got many billions of dollars worth of uh, investments out in the marketplace. And if you have a look at these things, then property when you go across commercial and residential, it's pretty good. It's not too bad. It's not as easy as shares and cash, but you can see a little bit of a change um, from shares and cash into these other assets over time. You can see quite an increase in these ones, folks, in the last little bit, which is what we do as property investors, which is always good. Yep, yep. So yeah, Alison, they tend to get a bit of a rap. Interesting thing though, uh, in the end with this conversation is that uh, the people who get the most affected by large super balances are who? Tell me who would be completely 100% against the idea that large super balances, large pension, outcomes and stuff need to be curtailed and restricted. And the same with like companies and trust structures and stuff like that, actually. So um, if you have a look at the people who um, are going to be affected by that. Yeah, the pollies, exactly, Stephen. Yeah, yeah, the pollies, mate. So, at the end of the day, it could be a little bit of grandstanding. It could be a little bit of, rhetoric around the media. But, these guys get lots and lots of benefits, tax benefits from trust and company structures. And did you guys know that politicians can have two principal place of residences capital gains tax free? Yeah, you heard me right. They can have one in Canberra and they can have one where they live. All right, it's ludicrous, and so often, unfortunately, in politics, it's just the way the beast is. You guys know this. They're going to look after themselves and then look after us. Sometimes there might be one or two people who try the other way around, but I think the pollies all, always put themselves first. Everyone's got an agenda, folks. You do, I do, the pollies do. Just make sure you understand it when you're investing and make sure it's aligning or adding value or being positive to your agenda. Anyway, there you go. I'm not quite sure I want to get into politics, Hardik. I think I'd probably get lost in there. It's a different beast, but you never know. Maybe in 10 years' time, when I've had enough of my entrepreneurial and property investing adventures, maybe politics might be attractive. There you go. You got to know the rules to play the game. Dead right, Alison. Yep. Yeah, yeah, Hardik. Yeah, exactly. Well, maybe we start up a new party, call a property investors party or something like that, and see if we can get a few votes. Hey, that might be kind of nice. All right, folks. Well, there you go. A little bit of a casual one today. A little bit of a cas chat about what's going on out there. Remember the 3 lanes of wealth, and all of us building our wealth in those 3 lanes and making sure we yeah, there is some tax advantages there, Alison, that's for sure. And remember those 3 lanes for building our wealth, folks. All right, that's it. I'm done and dusted. You guys be awesome and well. I'm going to go get myself a coffee now. Feeling very low key without a coffee, folks. I'm feeling a bit out of sorts, so I need to get myself caffeinated. You guys be awesome. Be well. Join me tomorrow for another Wealth Coffee Chat. I'll be at the home office, the home studio, so that'll be good. Been traveling this week, trying to get the hang of it. Thanks, Aaron. All right, that's it. I'm just rabbiting on. Bye, guys. You guys have a good day. See you tomorrow. Bye.